Hi everybody, it's Christian from Serene Education with the 4 majors analysis update for the last week of September 2015. So that will be the 27th of September through to the 2nd of October. End of month, September month. So I thought I would just look and see each of the monthly charts of the 4 majors, just to have a look and see how they progressed this month and see what's likely to occur going into the into October. So let's start with the euro against US dollar. This is the monthly chart. Clearly, when you look at the hard right edge, the first thing that really catches your attention is the fact that we have not seen any new highs over the last 7 months or so. So this is end of September. So 1, 2, 3, 4, 5, 6, 7 consecutive months now of clear resistance at this particular level. So 1, 1, 2, 3, 5, 9-ish. Thereabouts. Not going to be guaranteed, but thereabouts. Clearly has been a major resistance level of price over the months. So therefore, that is clearly the obstacle. Euro still managing to hold on to those levels, because if you look at the overall the overall setup, price is still one of negativity. The monthly chart is still to the downside. If you look at what price has been doing over the years, you can clearly see that price has been moving between 2 points within the channel, and pretty much when it broke the major institution moving average way back here, that had been a major resistance level of price over the years, 2010, 2012, the latter part of 2014, in fact, before we saw the negativity breakthrough. You can see that price has moved down towards this support level of the channel low and then a correction. But having said that, as in the past, we've had a correction and a very strong pullback or move in the opposite direction. This one has seen a failure to do so. In this case, clearly before we saw the candlesticks predominantly remaining blue, we saw a noticeable support and resistance level through there. Here, at the bottom of the channel, we saw a tweezer bottom, which is a reversal candlestick formation. So you'd expect, well, there has been clearly more bullish bias coming through to the market. This is almost 6-7 months ago. Having said that, though, we haven't seen that buying pressure coming through a lot or aggressively as we've seen in the past. We are below the institution moving average, where back then we're still trading above the institution moving average. So the negativity is clearly there. It is clearly painting a negative scenario for the euro against US dollar. And if I take a fib retracement level from the 2014 high to the current low in 2015, you can see the major support and resistance level, or the fib ratio or level here, the 76.4 and the 78.6, coinciding very nicely with the current resistance level highs we've seen over the last 7 months. So here, noticeably a major resistance level of price. So not a good sign. We have non-farm payroll going into the first month of the new month of October. The non-farm payroll figures coming, looking straight off the bat, or the ADP non-farm payroll figures coming out on Thursday and Friday, subsequently paint a picture where we're seeing more jobs created. So that's going to have further negativity on a pair that is finding it very, very difficult at the moment now to make new highs. She has consolidated really, really well. She's been able to hang on to those levels. You can see that price has failed to make any new lows subsequently over the last 1, 2, 3, 4 consecutive months. So price has pretty much been trading within a rough channel, is probably the best word to use. So we have clearly a major resistance level of price, but we're also seeing price not willing to give away those support level lows, i.e. making new negative sentiment. So here again, if we are to see any further negativity for euro against US dollar long term, i.e. looking into November, going into the last quarter of 2015, then we need to see this psychological support level here at the 10946 level being breached before we even see those levels that we saw back in early March of April of this year being tested again. So negativity, it looks like we're going to see prolonged negativity for the euro for the start of October. So here again, we've got some really important data out for the first week of a new month. From Wednesday onwards, it tends to get quite, we see a lot of economic data, so the volatility is definitely going to be there. So here again, we're going to just have to be patient. It tends to be painting a more negative stance for euro going into October. but that remains to be seen. We've seen in the past where figures have come out and they've been totally different compared to what we expected. So here again, trade with a bit with a caution this week, in particular because it's the first month of a new first week of a new month. And if we do see those figures come out for the US market getting stronger and stronger, then obviously we should be looking for further contractions on the Europe, and then we have viable target levels. So if I go ahead and just apply those particular targets, I'm just going to take away all these levels over here, for example, and just get a real just work back to normal, and then just go and apply my order pivot lines on here. So let's just go quickly and apply those. There we go. Okay, so the monthly chart, as the monthly pivot as it stands right now, you can see prices trading below that. On the weekly, we saw last week trading low. Having said that, you can see over the last month or so that the 20-period moving average doing a fantastic job of actually just supporting price. But saying that, prices failed to really take advantage of that over the last 7 months or so, and clearly a resistance level here is being forged. The 50-period moving average now coming into play over the last couple weeks, just keeping the euro down for this time being. So looking into the new week, we've got to have a look and see what's likely to occur. So let's just bring on the weekly pivot level just to see how that looks. So now straight away what you're looking for is to look at prices right now in conjunction to the weekly and the monthly pivot. So if we're in a negative trend, then we obviously want to see the monthly pivot above price, pretty much dictating where price sentiment lies. And that's clearly the case now, because you can see that this dashed line over here, the maroon dashed line, is the monthly pivot. But you can also see that the weekly pivot, which is the turquoise line, is also being plotted above price. So clearly we are seeing a number of things that are really backing up what we're seeing already on price action. We're clearly seeing a resistance level here, a prolonged resistance level. Yet again, we're seeing the weekly candle. You can see this weekly candle closing lower than last week's candle, even though it was an indecision candle at a major support and resistance level. It told us that there was further resistance level highs, so we should have been looking for negativity last week. We did see it, and clearly prices closed low. They traded below the 20-period moving average, but like it's done in the past, it's actually kind of pulled back to the upside of that 20-period moving average. So we know the 20-period, which is here the weekly S1 level, is clearly a supporter of price. So looking forward for the negativity this week, we need to see the weekly S1 level being breached. So Monday, Tuesday, Wednesday, Thursday, Friday going into this week ahead needs to close below the 20-period moving average to see further negativity or further opportunities to sell. So drop down to the daily time frame, and you can see what's hindering price right now is the institution moving average at the weekly S2 level. So ideally, if you're going to be taking any trades, aggressive trades from weekly S1 to the latter side, just be aware that you're still above the institution moving average. Therefore, you have to be quite aggressive, because price has fallen into this level in the past and subsequently bounced. Because once we're above the institution moving average, the bias totally changes. In this case, you can see that yes, euro has been moving sideways, but the continued sideways motion has then pushed price above the institution moving average on our daily, which in the past has been clearly resisting price. So here we have price now getting above the institution, but she hasn't been able to build on the momentum once she's got above it. So here again, be patient. Would you or do you want to trade between the WS1 and WS2? That's entirely your choice. It's there. If we do see continued negativity for euro, then look to short that into the institution. But take everything off the chart. Take everything off once you hit the institution. If price gets below the weekly S2 level, that could be down to the fundamentals out there, economic fundamentals. Then look to target aggressively towards the weekly S3 and then monthly, which is the current long-term or the 4-month support level here. So there's clearly enough bias to trade. Okay, you can clearly see that we have an intermediate uptrend over here, swing high, swing high, swing high, all that since March, not making new lows. So price has been moving to the upside, and you can see that price is now coming into this area now where we could see a conflict here between the institution moving average plus the uptrend, the intermediate uptrend coming into play. So here, be very do your due diligence and play it safe. Okay, we're going into an area now where we could see something happening. We don't want to speculate, rather let price dictate what's likely to happen, and then we just trade the outcome. If it gets below that weekly S2 level aggressively and get below the intermediate trend line to the upside here, that's going to pretty much paint a negative stance for October, and then we should be looking back towards those March lows that we saw way back here, which is just short of the monthly S2 level. And between those 2 points, there's clearly enough profit to be had. Is a good 650 odd pips there. We're not going to get all of it, but there's more than enough profit on there if things go according to plan. If they don't, then we look up obviously to the upside. So just be patient and wait for that to occur. Let's move on to sterling. Here again, look at the monthly chart. You can see the hard right edge over here. This is this candle right over here. You can see that most of this month we saw prices pulling back aggressively. Having said so, as we've headed into the end of September, however, we've seen negativity coming through. And if you look at the chart over here, you can see that there's a lot of negativity. The one thing that really doesn't really pay attention is the fact that, similar to its European counterpart, price has pretty much gone sideways. She hasn't made any new lows. It's been because of sterling positiveness. However, that's come unstuck as we've gone into the last 3 or 4 months, particularly for the outcome that's happening globally. It's hindering sterling in terms of a long-term growth purely because of what's happening elsewhere. So we've seen almost an evening star formation here where we had an up candle followed by a hangman, and then we had a bear candle close. And this is clearly showing resistance above price at the moment now. And you can see that this month, yes, we've had a slight pullback, but you can see that the negative sentiments come through the latter part of September now going into October. So when we look at everything is looking for negativity here. The parabolic SAR on the monthly is above price, which is not a good sign. I mean, we're not making any new lows, and parabolic is a trend line indicator, and you can see that price has actually pulled back over the month, so that would make sense. So we drop down to the weekly time frame. Straight away we get a sell signal, and you can see that we've seen a lot of negativity coming through over the last week, pretty much engulfing the pullback that we saw over the last 2 weeks. In fact, we saw a nice bearish engulfing candle which actually engulfed almost a full month or 5 weeks of sideways motion. We saw negativity, and we should have been looking to target or make way or make profit on that outcome. But then we saw prices moving aggressively counter trend, and then we're seeing it. So you can see a lot of volatilities come into the market in September, and what it's done last week is pretty much concurred that we're still seeing negativity for sterling, and it's now closed at the same level it was 3 weeks ago. When we apply the monthly pivot on this chart, the order pivot, there we go. So let's get rid of that. Let's apply the order pivot. Let's look at the monthly. So straight away I apply the monthly. I always look at the monthly. Look at where price is trading right now in conjunction to where the monthly pivot is. You can see the monthly pivot is above price, so therefore pretty much dictating what I'm really seeing on price action. The institution on the weekly is clearly hindering price from moving high again. We've seen a lot of indecision at the underside of the institution, and now we're seeing a bit more negativity coming into play. Everything seems to be stacking up. The only thing that's not really there for us at the moment is prices failed to make a new low over the last month. So that's what we need to see for October, is sterling making a new low, and that could predominantly happen if the figures that come out of the US market for non-farm payroll are as expected. Expecting the non-farm payroll figures to be far greater than we saw last month, and if that is the case, then we should see US dollar strength coming through, and that would in fact push sterling lower. So therefore we could get a breakout. You can see that the monthly S2 level is quite close, and it's predominantly because the monthly pivot is the monthly trading range at the moment now is quite tight, so therefore your pivots would be quite shallow. So get an aggressive breakout. You can see 163 pips, but once we get below that level, you can see there's a lot more room for price to breathe back towards those lows that we saw in February, March of this year. So 295 pips or so from the next pivots, S2 to S3. So there again, just do your due diligence. See how this week pans out in terms of all the market data, because it's the first week of the new month. You'd expect that. You can see on the daily time frame now, the only thing that's missing is the article is not really happy with what the setup is. We do see negativity, red arrow, red candles, all the moving up above price. The RMO is below, the OSM is below. Fantastic. We just need a more decisive break with genuine sentiment, and then we can see those levels clearly marked out below price in a lot of detail. So here, just be patient, see how it goes this week, and when the opportunity arises, look to see if we can target those levels aggressively to the downside. US dollar Swiss franc, not traded this one myself particularly, but you can see just looking at the matrix, a lot of positive strength. The US dollar has been looking healthy. We have seen a slight pullback, however, but saying that, you'll look at last month's candle, indecisive, but it still had closed slightly higher than the prior month, so the bias was still there for the US dollar. We just needed to come through. Yellen has mentioned, well, we didn't get an interest rate hike in September, but Yellen has mentioned that there's more than likely a possibility that interest rates will be hiked by the end of this year. Happy days. So euro strength, people are still happy with that. Yeah, they're not going to get it now, but likelihood is we're still going to see it in the near term future. So that would still put more positive sentiment on the US dollar, and therefore we should be looking still to the high points, especially to the January high, and we're not too far off from that level. So here I'm just going to apply the pivot levels and see what it brings. So let's go ahead and just apply these quickly onto, there we go. So straight away what I'm looking for is to see where price is in conjunction to the monthly pivot. It is clearly the monthly pivot is below price. Perfect, so that's positive, so we should be looking for upside. Drop down to the weekly time frame. There we go, we get another basting on the weekly. Everything looks fantastic. The R squared on the weekly is all in order. It's when we get down to the daily, the 4-hour, and the hourly that the R squared is not really painting any genuine sentiment. It is positive, but we haven't seen any genuine sentiment because price has not made a new high. You only have to look at the weekly and look back again. You can still see that price has still not made a new high. And in fact, the actual intermediate trend or the highs have got lower. So that's not a really good sign. So let's hope to see if the unemployment figures for the non-farm employment figures for this end of week are good, because that would obviously have a bullish outcome for the US dollar, and that would push price higher. And if what we want to really see is we want to see the monthly R1 level being breached. This level around about that 99546 level. Ideally, we need to see that being breached to the top side, and that would give us a lot more certainty that positive sentiment is coming back into the frame again, and you can see that prices will be breaking out of this consolidative range, a very untidy consolidative range that we've seen since the latter part of July. Get out of that, and then we can definitely see price moving towards those January highs of 2015 and then higher. So look at the fundamentals again this week. Look to see how they complement it. At the moment now, I think we should still be looking for US dollar strength. If those figures do come out as expected, expect US dollar strength to come through. Ideally, price above monthly R1 would be a far better picture for long-term continuation of what we're seeing. Failure to do so, we could see price going or remaining in this consolidation, and therefore not really much to trade. When you start looking at this as consolidation, if you want to start trading intraday, the risk just goes up tenfold, and purely on a money management basis, not really clever thing to do. So just stay on the side. Let's look at the US dollar Japanese yen. Here again, another US dollar cross. You can see that the last month, in fact, we saw a pullback after failing to break a 4-month resistance level high at 124.23 and change. So if I just apply the pivot level on this particular chart, have a look and see exactly where those pivot levels are, you'll notice that the monthly R1 level is predominantly that level we need to be above. You can see not really making new highs. Having said that, price has pulled back, but she's still holding on to the 2014 high. So going into the end of 2014, you can see the resistance level highs. That's our monthly pivot going, and you can see that US dollar is trying to do a fantastic job at trying to hold on to those levels. So we saw a lot of negativity last month, but by the end of that physical month, you can see price pulled all the way back again into the upper range of that candlestick, at least 60% of the candle range stick, but also most importantly staying above the monthly pivot. So therefore this month also doing the same. So therefore what we should be looking for, you can see that price is just below that level on the weekly. We need to price to get above it. You can see it's been squeezed between the 20 and the 50 period moving average now on our weekly time frame. The candlesticks are still positive. There again, if we do get positive sentiment coming through at the end of this week for the start of October, that would have a positive outcome, and we could see this monthly pivot being breached and closing higher. And that would then open up the floodgates for further opportunities to the upside towards that monthly R1 level here at that 125.58 and change level. So here, this week, if we are to see any genuine sentiment moving for the US dollar, as expected. Got to see it happening Monday, Tuesday, Wednesday, Thursday, and Friday, building into that Thursday and Friday outcome. You can see the matrix box of here. The monthly is pretty much still telling us to look for longs. However, if you get down to the weekly, the daily, the 4 hour, etc., you can see a lot of indecision. Weekly is looking really negative, but if you look at the weekly chart, we haven't really seen any new highs. We've just gone sideways. In fact, we're actually trading at the underside of the consolidated range. Now we're back below, so it's not a really good sign, because that puts more negativity on price itself. So here again, look to see what the fundamentals do. Do they back up? Are they coming out as expected? If they do come out as expected, as positive as they expect them to be, then we should see US dollar strength. If they come out, however, total opposite, look for US dollar continuation to the downside. So in this case, we'll look towards that S1 level, then S2, S3, but S1 to start with. But let's just bide our time, be patient, look for a break of the support level here at the 11890. Thereabouts, you can see it's been a major support and resistance level in the past for this year. So if we get a nice bearish engulfing counter close lower than that, then we expect to see further negativity. And vice versa, bullish engulfing counter to the upside, look to see a price making a reattempt of those monthly R1 levels way up here at that 125 level. Okay, I'm going to leave you with that. Hope you have a fantastic week. Please do your due diligence, guys. Start of a new month means non-farm payroll. There's a lot of data going into non-farm payroll, so Wednesday, Thursday, and particularly Friday, there's a lot of data, so we should expect a lot of volatility if prices come out as expected or not as expected. Speculation will be driving the market over those 3 days in particular, so just do your diligence, be patient at this time, because what could ultimately come out on non-farm payroll figures could dictate price action for the remainder of October. So don't think you're losing out. It'll do far better, good for you just to stand aside and watch price action, because what happens on Thursday and Friday will dictate potentially what's going to happen for the remainder of the new month. So just keep that on board. Back that up with sound money management rules, and you're bound to come out being a winner. I'm going to leave you with that. Hope you have a fantastic week, and I'll see you guys out there. Until then, trade serenely.